Hey everybody, this is David Trungale here. I wanted to take a peek at the Dow Jones Industrial Average as it sold off more than 300 points on Friday. And of course the news was flooded with pessimism. People were talking about how this is the start of a major collapse and that the bull market is over. They were talking about the strength of the Japanese yen and all kinds of other stuff. So the big question is this the end of the bull market? I would say no. I think this is a minor correction and a long-term uptrend. Now, what's interesting to me is the sell-off that occurred back in September and October. It was around 1,500 points of selling. Then there was a subsequent rally of 2,000 points, and now we're going back into a reaction. So how can anybody call what we're seeing now some sort of an aberration when we had major sell-offs in October, we had a sell-off back in January, and if we go to the longer term perspective, things are looking pretty good from the 4-year weekly chart. We had some congestion in the middle of 2013. People were saying that the bull market was over back then. The fundamentals did not support the market going higher, but it did, of course. And even way back in 2011, I remember, the Dow was at a 52-week high. There were people saying, look, we're going into a double-dip recession. Don't touch stocks. Each and every time they were wrong. So the lesson to be learned is that you should not try to predict the top of the market. When you do that, you're going to be wrong a lot more than you're going to be right. Let's take a look at the 10-year monthly chart. This shows plenty of strength, and the recent selling is quite unremarkable from this perspective. Now, what I'd like to do is talk about not necessarily bottoms, but potential targets where I would expect some support, or in other words, a bounce up. So in the short run, it looks like the Dow Jones could fall farther. Of course, we are poking at this previous high back in September, but if we look at the next checkpoint, I would say taking 50% between this low and this high would put us a little bit below 17,000. That could potentially serve as some support. Markets tend to retrace in 50% increments from a notable low and a notable high. If we look at broader term support, I would say a little bit below 16,000 is a number to watch. I'm not trying to say the Dow Jones is going to fall below 16,000. I'm saying if it does go in that vicinity, I would expect a bounce. Of course, if I'm wrong and it does continue to sell off, it's important to reanalyze and consider exiting the market, because you do not want to hold on to the market if a downtrend is established. So all these other sell-offs have been minor fake-outs, and that's why I'm not a big fan of trying to get in and out, because these minor fluctuations are a little bit tricky. But like I said just a second ago, you don't want to hold on to the market if the long-term trend is pointing downward, and that's where the experience comes in, is trying to decipher a minor correction from a downtrend. So at this point in the game, I would say, look, this is a minor sell-off. I think we're going to bounce back. Eventually, we're going to take out the $18,000 high that was set recently. It might take a little while, but I think it's going to happen. From a fundamental standpoint, the federal fund rate is still froze at 0.25%, even though I'm not much of a fundamentalist. That is one indicator I look for. And when interest rates are that low, I think it's a bullish environment for stocks. So thank you for watching this, and stay tuned for the next video update.